Hey, what's up you guys? John here. In this video, I'm going to talk about Ray Dalio. He's a big-time investor with Bill Gates, or I guess you could say philanthropist. And he's on the front cover, Gates is on the front cover of his book, saying that he provided invaluable guidance to him. Ray Dalio is the 30th richest person in the entire country of America, the 69th richest person in the world, founder of Bridgewater and Associates. He founded this company when he was 26 years old, 2012, at $160 billion worth of assets under management. He timed the 2008 market crash impeccably, made out like a bandit while everyone else lost money. And he's talking heavily here in this video about how cash is trash, stock market advice, and what you should be doing right now to prepare yourself. So that being said, smash that like button. It lets YouTube know that you want to see more financial education videos. Drop your comments below in the comment section. I'll respond. And if you're a new subscriber, drop it in the comments that you're a new subscriber, and I'll personally welcome you to the channel. All right, guys, let's begin.
The supply lines are going to change.
Brace yourself for what I'm about to show you. We would think that this would be maybe 10 or 20 years away, but no, it's right around the corner. This is going to greatly impact trucking jobs. We have 3.5 million truckers in America. We have 3 million drivers for Uber. We have 1.4 million for Lyft. And this is just the start. This is the direction that we're heading right now.
This is Ford's two-legged delivery robot. It's called Digit. Ford is working with Agility Robotics to create autonomous deliveries. Once a self-driving car arrives at its destination, Digit will unfold itself from the back of the car. Then it'll grab the correct package from the vehicle and walk straight to your door to drop off the package.
I heard a quote from a billionaire online many years ago, and it was as follows. Smart people see things for how they are. Other people see things for how they want them to be. Of course, we'd all like this to kind of be an illusion or something in the so far distant future that it doesn't apply to us. But the reality is that this technology is only in the beginning stages. And if you were an online tech CEO making millions upon millions of dollars, and you had the option to get away from hiring an everyday employee that can only work 40 hours per week, or buying a robot like this, a one-time purchase for even if it's $200,000, but you can work the robot twice as hard. The robot always shows up for work. You never have a lawsuit. You never have an issue or a problem. You probably lean closer to that robot. Well, that's going to apply to many service industry jobs, and it's going to pose a large threat.
And you have a large wealth and values gap and political gaps. You tend to have fighting, internal conflict. And so rising internal conflict about how to divide the wealth pie.
And that's true. The wealthy are going to be the judge and jury determining how that pie is divided over the coming few years. And what I bet's going to happen is they're going to divide that pie in their favor. I mean, why would they choose any other way? So America at one time was the #1 country for education and healthcare. Now we're number 27. And I think that that's going to greatly impact where these high-paying jobs go in the future. And I think if we look at places like India, where the science, technology, engineering, and math degrees are over 30% of graduates compared to 18% in America, I think we're going to have a lot of money flooding from America over to India, and that's going to greatly impact our economy and I believe the real estate markets, stock markets. I think it's going to just greatly impact all markets here. And I think if you are a smart investor, or you want to be a smart investor, you're paying attention to all this. Ray Dalio thinks that this upcoming market crash is going to be way worse than 2008.
This is bigger than what happened in 2008. We see something like $20 trillion of losses. The most important thing is to know how to diversify well. And what I mean by that is to go beyond just the traditional 60-40 stock bond mix, or even the same countries.
Now, diversification is great if you understand what you're doing. The problem is most people diversify into a bunch of different assets or stocks or commodities, and they'll spread themselves very thin across all, thinking that that's going to be a better outcome, because if one goes down, then the other ones will float the ship. The problem with that is that Most people don't understand the second, third, and fourth investment as well as the first one. So then they take on more risk as they go along. And as you invest in outside countries, you're taking on different risks because you're not going to know that investment as well as a majority of other people that are investing in those areas. So always look at investing like a competition. The more you know, the better trained you are, the more likely it is that your outcome will be successful.
Include in that portfolio assets that might seem unusual, to include some gold, to include inflation index bonds, to think about the currency exposure, to think about safety as different. Most people think that cash is safe. Cash is the least safe investment. It just doesn't have the same volatility to it, but it has, because they're producing so much cash, it has a negative real return.
So gold has been around since 40,000 BC. 40,000 BC. It's likely not going to go to zero tomorrow. A lot of people are investing in gold right now because they're very unsure about the dollar. And that makes a lot of sense.
Liquidity is going to be more important than before because things change in unexpected ways. Look at how, in many of the cases, the businesses that one would have thought was a good business, and let's say you're in private equity, and that you're with that company. And so the restructuring, the ability to rebalance and diversify and to be cautious about making a highly diversified set of bets is, I think, the future. But thinking even of asset classes, thinking about the value of money. We look at asset classes and we say, oh, do I want my money to be in stocks and which stocks? But we don't think about stocks, bonds. We think about those traditional asset classes. But we don't think about the value of money and what's going to happen in terms of the printing of that value of the money and how to diversify it well.
And that's right. Right now we have $24.22 trillion in U.S. debt. And by the end of the year, it wouldn't surprise me if we hit 28 or 30 trillion dollars. Nancy Pelosi wants to pass an act right now that will be $3.4 trillion. So as we continue printing money, the value of that dollar is going to go down. So you want to be sure that you're investing in things that you know, like, and understand, that you think have the test of time, that can go 5, 10, 20 years, and it's a really good investment. And you want to have something that can also be liquid, to where if you wanted to sell it, it's not going to be a very, very large loss.
The investment environment going forward will be very different from the environment of the past.
If I had to take a guess on timing, I would guess that we're not going to see anything happen until after elections, because if we saw a big crash happen before that, then it'll be very hard for the president-elect to get reelected. And I think ultimately that's his main ambition, is to secure the election. And he can't do that if we go through a big crash soon. So I think they're going to continue to print money and print money and print money to keep that illusion going. But at some point in time, they're going to have to try to land this airplane. And I think when they try to, I think it's going to be a very, very rough landing. So right now, the smart thing to do is study, to learn, to prepare yourself intellectually, to make a really smart investment. Because all you really need is that one deal. If you make that one really, really good deal, you'll change your entire life. But if you make that wrong deal, you'll ruin your life. And that's just the harsh reality of it. If you make that one wrong deal, it could be very devastating. So that being said, now's the time to study, to learn. I think you have a few months at least to really bear down and study and gain a competitive advantage. Because again, like I mentioned, investing is like a competition. The more trained you are, the more likely it is that your investment is going to be successful. The smartest thing for everyone to be doing right now is to ask themselves, what could I do to become financially independent? And I know that's a pretty obvious question, but it's pretty simple if you actually look at it. If you just take out a piece of paper and you write on one side all of your debts, rent, food, cell phone, health insurance, you write out all of your debts, and you start reverse engineering those debts through a multifamily property, whether it's a fourplex where you buy a fourplex and you live in one of those units and rent out the other units. And doing this is going to not only pay for your mortgage, give you some tax benefits, but it might also give you a little bit of profit each month. And then you can slowly start reducing your costs, because what I think is going to happen is I think that we're going to start seeing a big shift between people having money and not having money. And so if you're in a job right now and you get let go from that job, you'll at least have that financial security. You're going to at least have that place to live that people won't be able to take from you. And the other thing is going to be understanding real estate, understanding a good investment, what a really good investment looks like, because the last 5 years we've been in this huge bull run where it just seemed like all you'd have to do was buy a piece of property, buy that property over time, and it's going to just continue to appreciate. That's not going to happen. And I don't think that's going to happen in 2020, 2021, 2022. I think we're going to see a big crash in real estate prices. I mean, we might see a lot of money flooding to real estate due to people looking to get the money out of banks because of the volatility in the dollar. But we're also going to have that $1 million question: is how can people afford these expensive rents with all of these jobs being taken off of the market? So if you have all these companies going under and all these service industry jobs that were basically filling those units, your apartments, that they were paying those rents, and now those are gone, how can those rents be sustainable? That's another question that I have. So it'll be very interesting to kind of see how this market pivots. Right now I'm studying a few hours a day and expanding my mind as much as possible. So without further ado, please smash that like button, drop your comments below, and subscribe. If you're a new subscriber, let me know in the comment section. I'll personally welcome you to the channel. All right, guys, thanks for watching.